we are recording. So tonight's class is going to be very, very brief. And what's going to happen is this. For questions, I'll be sending a link to the general group, the Telegram channel. So click on the link if you have any question. Click on any of those links, either the WhatsApp or Telegram DM link to ask your question. The reason is I noticed that when I ask questions from the previous webinars, when it's time for questions, some of us struggle with our microphone and all of that, and that takes too much time. So what's going to be happening is let me send the link before we proceed forward. Okay, yeah. I've sent the link to the Telegram channel. So if you have any question, just click on any of the links, either WhatsApp or Telegram, and then ask your question there. So I'll just read them out and answer them. Okay. So tonight's class, I don't want it to be more than 30 minutes. So let's see how the spirit leads. Okay. Well, welcome everyone. It's been a while. I think it's been 2 months since we had our last webinar. So let's jump right into it. Okay, so we're going to be having about 3 webinars. Okay, every Wednesday, every week, same time. So after tonight's webinar, because it's nighttime here, I don't know where you're tuning in from. The next webinar will be next Wednesday, and the third one will be the next Wednesday after that. Okay, so the session is being recorded, so you can always catch up. The recorded version is going to be it's going to be uploaded on YouTube, and the link is going to be published on the general Telegram channel. So since today is the first webinar, so we are going to be starting easy. Okay, so let's talk about stuffs that we've talked about previously, which is trade execution strategies. Okay, these are topics I've talked about previously, but for the sake of those that may be tuning in today for the first time, I'll just quickly go over them in case we are kind of slacking behind. Of course, before we jump into it, every strategy has its up and downs. Okay, so there will be a profitable run, there will be a slow period, there may even be a period of drawdown, but the bottom line is a good strategy should be able to take you through all of those phases. Okay, through the profitable phase, the break-even phase, the drawdown phase, and back to profitability again. Okay, so I'm going to be talking about 2 strategies that I've talked about previously, so that we'll just refresh our memories, so that next week we'll dive into something. Okay, so I'll start with the most recent strategy I talked about, which is the change of structure. Okay, then you want to execute. Now it's simple. I'll quickly go over the rules. After tonight's class, I'm still going to be forwarding the link of the original video. Okay, so you can watch that video, then watch tonight's video, because I will be saying certain things that I didn't say or that I didn't mention during the first or the initial video. Okay, so first of all, let's go over the rules, because when I trade with rules. It doesn't matter whether I'm having a winning streak, a losing streak, a break-even streak. It doesn't matter. No matter the phase. Okay, I notice Mr. Ima is. Let me just confirm if Mr. Ima is trying to say he can hear. Give me a moment. Mr. Ima, I can see that you're from. Hello, can you hear me? Okay. So nice reaching out, Mr. Okay, we'll talk about gold. We'll talk about gold. Okay, that will be the first question. What's your view on gold for the next 2 months? All right, we'll look at gold. We'll look at gold after now. Okay, so let's quickly go over the strategy. And yep, the rules first of all. Let me just put it up here. So the first thing you want to look out for is to plot areas, plot areas of support and resistance. You understand? So that's the first thing you want to look out for. You can do this on personally the way I strategies. I look at it, I look for these areas of structure on the 4-hour, daily, weekly, and monthly time frames. So 4 time frames: 4-hour, daily, weekly, monthly. Okay. You can plot areas of support or resistance on the monthly, on the weekly, on the daily, on the 4-hour. All right. So when you have these zones, the next thing you want to look out for execution is, hey, when price comes into any of these zones, whether it's the 4-hour, the daily, the weekly, or monthly time frame. Remember, sometimes within the monthly time frame, you could have the weekly area of value within the monthly time frame, or the daily area of value within these other time frames, or the 4-hour area of value within all the time frames above, right? Daily, weekly, monthly. You get the points. Sometimes price may have traded beyond the monthly, weekly, daily. Now, the only thing you have is the 4-hour time frame. All right. So that's why I said 4-hour, daily, weekly, monthly. All right. So you want to plot these areas of support and resistance. Then the next thing you want to do is, when price comes into these areas, you want to jump to the 15 minutes time frame, right? To look for trading opportunities for execution. Did I spell this correctly? Okay. All right. So that's what you want to do. So the rules are very, very simple. Okay. So you want to wait for, if you go to this 15 minutes time frame for execution, you want to look for change of market. So price comes into an area of resistance, the idea is you want to sell. If price comes to an area of support, the idea is you want to buy. Now, we've talked about this previously, so this is just more like a review, because sometimes maybe when you watch that video, when you try to implement it on your own, it was a period of drawdown within the strategy, and then you probably felt like, okay, let me just jump onto the next best thing. Okay, so I'll just quickly go over them, refresh our memories. If we can go back again and re-practice and re-implement, you see that, okay, yeah, every strategy, no matter how profitable it is, has its own periods. All right, so that's the purpose of today's class. And since this is the first webinar, let's just refresh our memory, right? Then next week we'll go into something new. All right, so let's take this most recent trade, because aside of talking about this second one, let's talk about this first one. This is a different strategy on its own. So let's talk about this first one, right? First of all, remember the rule states that you want to go to the higher time frame, 4-hour, daily, or daily, weekly, or monthly, right? So what do you want to do? On example, I think this happened on the 4-hour time frame. Okay, this happened 4-hour time frame. Now, what are the rules behind plotting a simple resistance area, right? Give me a moment. Someone else texted. No audio from my end, please. Okay, really? I think my mic is on. My mic is on. That's from who? That's from Vidas Ridley. Okay. Esther. Okay, we'll come to all of that. So no audio from my end, please. So if that is you too, please send me a confirmation message if you can hear me. Can you hear me? I think my mic is beeping, so I think we can all hear. If you can hear me, please raise your hand. I notice Mr. Temi's hand is raised. Okay. So if you can't hear me, just drop off and rejoin. Drop off and rejoin. Okay. Okay, thank you for confirming. Okay, thanks for those hands. So, by the way, if you're joining us, okay, yeah, thank you, Mr. Ima or Mrs. Ima. I don't know who that is. So you said you're audible. All right, so let's just proceed. So, plotting a simple support and resistance level, we all know the rules, right? If I squeeze out my chart, this is the 4-hour chart. If you look from left to right, you will see this area, price reacted to that area. Okay, someone just also confirmed that we can hear you. Okay, thank you. So from left to right, you will notice that, hey, this area impacted price significantly to the upside. Then all of these areas also impacted price to the upside. Please, if you can see my screen, those that have messaged me, also let me know. I believe my okay is a mister. All right. So if you can see my screen, please just type see your screen. Okay. Anyways, you will notice that all of these areas, price also reacted to that area. Then price broke below, came back for a pullback, and then still sold off. So, which means this area is an area of value, at least on the 4-hour time frame, right? This is an area of value. So that means if price is trading below that area, okay, thank you. You can see my screen. All right. So if price is trading below that area, then that area is an area of resistance, right? So which means when price approaches that area of resistance in the future, you want to now go down to the 15 minutes time frame. Then you want to look for, okay, thank you. So you want to look for a change in market structure to do what? To sell. Because the idea, the simple idea, the straightforward idea in the trading spaces, you want to sell at resistance, you want to buy at support, but we just don't want to buy or sell blindly, right? So price is at an area of resistance, we want to look for a change in market structure to sell. Price is at an area of support on the higher time frame, on the 15 minutes time frame, we want to look for a change in market structure to buy. You get. So I won't be giving too many details. I'll just try to show you a few trades that have played out within the same strategy. Then, since I'm going to send the link to the initial video, so you can always catch up with that. All right, watch that, watch this, practice, and see if it's something you would like to apply in your own trading. All right. So now price is approaching an area of resistance here. So let me put this vertical line here and observe the moment price came into that area of resistance. Okay. So now I'm on the 4-hour time frame. That's the 4-hour time frame resistance area. So I want to go to the 15 minutes time frame and look for a change in market structure from that. Because if price is trading up into that resistance, during that price action will be in a bullish trend, right? So we want to see that trend change from bullish to bearish, all right? So the moment price traded into this resistance area was on Thursday, the 16th of October this month, right? Last Thursday. So let's go to the 15 minutes time frame. I'll squeeze out my charts. Okay. So remember, when you put these vertical lines on your chart, it's actually showing you the open of that candle. So I'm going to move it all the way to the moment. Now that I'm on the 15 minutes time frame, the moment price came into that zone, which is this green zone here. So the rule states that, hey, you want to look for a change. You want to wait for a change in market structure before you sell, right? So when price was coming into that zone, of course, it's in a bullish trend, creating higher highs and higher lows, higher highs, higher lows, equal high, higher low, went on, created a new higher high, equal high, a shallow higher low, then a new higher high, before dropping down to this area here. Now, this is a lower low. Now, we see the market from different perspectives. So personally, the price trading around here is obviously below this previous level here. So I use market structure in a very, very unique way. All right. You can use market structure in your own unique way. This other trader can use market structure in their own unique way, and everyone is going to end up making money in the long run. Okay. Price is trading around my resistance level within the system is telling me that, hey, wait for a change in market structure from bullish to bearish to sell. We had a new lower low here. Why is this a new lower low? Because it is lower than this previous higher low. So we're bullish from the bottom all the way to the top. This is the first time when, after coming into that area of resistance on the 4-hour time frame, this is the first time we got a new lower low, right? So I'm waiting for a pullback into the first. There's something I call first sell area, second sell area, first buy area, second buy area. Now, I've done a video on this on under market structure. If you go to the YouTube channel, type market structure, you see how I apply market structure. All right. Then, secondly, again, I explain this in details in the video. I'm going to be sending the links once again to the Telegram channel after tonight's session. So price pull back into the first sell area, then gave what? A bearish candle. In this case, it's even a bearish engulfing candle. I know some of us may want to argue, how is this candle a bearish engulfing candle? Now, I can't go into details how I look at candlesticks in this class. Maybe the next class should be about candlestick and something more interesting, because we tend to want to run away with the idea of candlestick formation as represented in the candlestick Bible. But in real trading, those things doesn't really matter, all right? So maybe I'll talk about candlestick patterns and something else in our next webinar, okay? But in my books, I will say, hey, this is a bearish engulfing candle, all right? So, but all you want is a bearish candle since the idea is to sell. Now we've seen a change in market structure here. Then want to pull back into what I call the first sell area or the second sell area. Now in this case, this area is the first sell area. This area is here. Then this will be the second sell area above here. Okay, so I'm looking for sells either at the first sell or the second sell. So even if the first sell fails, I will take the sell at the second sell area. But don't worry, I'm not going to be explaining that in tonight's class. Just watch that video. I explained in details there. Okay? I'm going to be sending the link once again after tonight's class. Or I'll send it tomorrow. When I publish this, I'll send the link of tonight's class and the link of the previous video so that you can watch both together. All right? So the price gave the first sell area around here. So that was where I got in last Thursday. And I love 2-to-1. Risk to reward 2.01. So let's just say 2-to-1. Okay. So there's this series I'm documenting right now on a different strategy. I think this strategy also fits into that strategy. I'm also going to be publishing that probably tomorrow. So 3 videos tomorrow. So that trading for vacation. So that's going to be the tag. So I'm going to record my thought process until getting into the trade, the withdrawals, when the money hits the accounts, all of those details. But that's not for tonight's class. All right. So I took a trade based on that challenge here. All right. So anyways, price hits the 2-to-1 target. Of course, continued even lower. But it hit target and all of that. Right. So this strategy, this other trade is a trade I sent to the Signal group, I think around Monday. That was 2 days ago. Yes. So this is a different strategy. So this is not the strategy we are talking about tonight. So that's one example. Maybe we should take one more example so that you can properly assimilate what is being said. Probably let's use a different pair. Let's use GBP USD. Let's use GBP USD. GBP USD. Now, for those that may be joining us late, like I said, the links I sent is, I think there are about 2 links, one for WhatsApp, one for Telegram. So if you have any question, just drop your messages there. I'll read them out and answer them live. Okay. So let's take an obvious example that we can see here. Remember, the rule states that, hey, on the higher time frame, which is 4 hours all the way up to the monthly time frame, so which is 4 hour, daily, weekly, monthly. That's how I use it, right? So you want to have an area of support, area of resistance. Then when price comes into those areas, you want to switch over to the 15 minutes time frame, wait for a change in market structure to execute, right? Let's use an obvious example, which is around here. So price on the 4-hour time frame broke below here. Then you know how I analyze on the weekly analysis, right? Want to see price pull back, then sell off. Okay. How is this even an area of value? We're looking for areas that price has reacted to significantly in the past. This is 1, this is 2, and this is 3. All right, let me check. Okay, I think I'm still audible, my visible. All right, let's continue. So that's clear, right? So that's a valid area of value. If price is trading above there, that will serve as an area of support. If price is trading below that area, then if price tries to attempt that area again in the future, it's going to serve as an area of resistance, right? Okay, let's proceed. Now, price broke below that zone, came back for a pullback. Remember when price was approaching the zone, because now it looks like price has played out, it's easy to analyze. You understand? So, of course, when price is attempting that zone from the top, when price is approaching that zone, your mindset is you want to buy, right? So let's say you bought, probably you made money before price broke below it, fine and good. Even if you lose, all right, you wait for the next trade. So while you're waiting, price has broken below and now went for a pullback, right? So now let's figure out the moment price came into that resistance area after breaking out for the pullback. I don't want to take this one example when price attempted that zone. I think we'll look at that briefly because I took that trade. This second one I want to talk about, I really didn't take it. All right. But let's even see if it gave an entry. Okay. Before we talk about the one that I actually took. So let's talk about the one I didn't take. So price, let's put a vertical line there so that we can all follow. Let's put it on this candle here. Now it's covering the candle. Let me move it out of the way. You will see this huge bullish candle that went into that zone. Okay, someone sent a voice note. Okay, I'll look at it. Give me a moment. Let me just play this voice note. I think that was a mistake. Okay, that was a mistake. So this huge bullish candle here went into that zone. So we want to spot the moment price went into that zone so that when we scale down to the 15 minutes time frame, let's try to spot that change in market structure. So I'll move this vertical line and place it on that huge bullish candle. So we'll go to the 15 minutes time frame now. Now on the 15 minutes time frame, what do we want to do? We want to look for a change in market structure. Okay. So I'll move this all the way to the moment price came into that zone. This is the moment price came into that zone. as represented on the 15 minutes time frame. Now, what is it telling us? Now that we're on the 15 minutes time frame, we want to look for a change in market structure from bullish to bearish, because as price is going back to retest that resistance area, previously a support, price broke below, now it's going back for a retest to turn it into an area of resistance, right? So it was bullish until it came into that zone, right? Gave a higher low because it was bullish. So we are going to classify this as a higher low. But what we are looking for is a new lower low, right? Then price went on to create a something like an equal high. You'll be wondering why my starting point is here. So usually, maybe when we talk about candlestick next week, I'm going to explain how I interpret candlesticks. All right. I really don't care about the wicks that much. Yes, I bring the wicks into play when I'm trying to plot a zone, but when I'm looking for price action play, I really care less about the wicks. All right. So you will notice that I placed the first point of this arrow, or should I say the second point, because I started from the bottom. I placed the second point here. So you notice that the second point body of those candles there. But anyways, let's continue. So higher low, equal high, equal low, right? Lower high, higher low, higher high. Remember, what we are looking for is a new lower low. So no trade. Higher low, lower high, equal low, higher high. At what point did the trend of the market change? Here. This is the first time we had it, an obvious lower low. So all of these areas here are our pullback areas. So one thing that I do using this system is when there's an impulsive bearish move to the downside like this, I play with what I choose or what I opt for are the most recent areas price obviously just broke out from. These are also recent area, but this right here is the most recent area. You understand? So that's the one I'll go with. Then I'll wait for the pullback into that area, then get a bearish candle to get in as a confirmation. So usually it's two things. If I'm on a winning streak, then my stop loss would be right above this swing point here. But let's say, hey, that's the first trade of the month, or maybe my first trade was a loss. I'm trying to play safe. Then I'll put my stop loss above this second sell area here. You understand? But either way, whether you put it above here, let me put a line there. Whether you put it above here or above here, it still would have played out. You understand? Though I didn't take this trade. The one I took was somewhere around here. Okay? Remember, this is still that 4-hour zone. So price came into that zone. Looks like it broke above it. Remember, this is the 15 minutes time frame. On the 4-hour time frame, what we'll have around here is just a long wick below support. Probably what SMC and ICT traders call liquidity sweep. Now, one good thing about this strategy is going to make you wait out potential sweeps like that, because now you're waiting for a confirmation, you're waiting for a change in market structure to execute. So you are going to wait out all the fake outs in most cases. Of course, there are times whereby even though you wait it out, it's still going to hit your stop loss regardless. Those things happen. Like I said in the beginning, every strategy we have is winning streaks, losing streaks, break-even streaks, Then back to winning streak is just like a circle. It's just life. Remember, as a trader, you're an entrepreneur, right? As a trader, you're an entrepreneur. You work for yourself. It's just like you having a physical business that you turn up to every single day and try to see how you can build it from this point to a greater height. You understand? So that's what trading is all about too. And in that process, you're going to go through ups and downs. What trading is all about. Why you stay profitable is your winners should always be bigger than your losers. That's how you make money. If you line up 100 traders, I'm sure that 80% of those traders, individual trades, will have way more losses. So in terms of individual trades, let's say you place 10, they may have like 5, 6 losses. But those 4 winners, those 5 winners are going to be bigger than the losers. And that's how you make money. So it's not about that. And that's the difference between profitable traders and those that are yet to find consistency in terms of profitability in trading, right? Profitable traders know that, hey, I want to make a profit at the end of the day. That's all that matters. I don't want to blow my account capital preservation and then make profit. Even through losing streaks, you don't blow your account. It doesn't make sense, except maybe you're trading $100, $200, $500. And thankfully, we have prop firms these days. Trading $100, $200 will not give you the life you're looking for. But anyways, that's not why we are here. Probably we'll talk about that later as we progress with the webinar, maybe next week or next 2 weeks. All right. So, but this is the 15 minutes time frame. I'm sure that on the 4-hour time frame, all of this price action here will just be represented by a week. All right. I know that we're trading within a support level, but trust me, that doesn't mean I'll buy, because obviously you can see that price came into that support level. Remember, this support is from the 4-hour time frame. We created a lower high, a new lower low. Then we went on to create a let me even lower high, higher low, higher high. We're supposed to get in around here, or I was supposed to get in around here, but I won't get in because price had attempted to break below that zone. So even though the trend of the market has changed, but I can see that, hey, price had broken below the support level. So I will wait for price to break out of the support level, new higher high. Now it has broken back above the support, right? So now I will be comfortable trading the pullback, right? And that was where I got in here with the first bullish candle. Stop loss, very, very easy in this case, just right below the support level, 2 to 1, easy. Did I say easy? It's not always easy. Sometimes you go into some losing streaks too, but it's part of it. Okay, yes. Later on YouTube or Facebook. Okay, yeah, I'll drop. Okay, my link, my screen. If others can see my screen, kindly confirm. I think this Mr. or Mrs. here is saying they can't see my screen, but someone already confirmed that my screen is visible. So if you can't see my screen, please let me know. And if you can, please also let me know. All right, so that I won't just be talking to myself. I'm here for you guys. So that's another example right there. Okay, that's another example right there. So our time is fast spent. I said I don't want tonight because I have some questions already to answer. There's another strategy that I've talked about previously, which is the weekly dodgy strategy. So I think, okay, someone just confirmed the screen. So if you can't see my screen, probably you may need to quickly drop off and rejoin, So quickly drop off, rejoin. That way you'll be able to see the screen. These things happen with Telegram sometimes. All right. So should I go on with this other strategy, or I think let me take some questions. All right, let's attend to some questions because I don't know if you have any question. Please either drop a voice note or a message on WhatsApp or Telegram. I sent the link to the general Telegram channel. So click on any of those links. It's going to bring you to the DMs. All right. So I think the first person that asked a question was, what is my view on gold for the next 2 months? Now, I will take you to the gold charts. I think that was Mr. Ima. So I'll take you to the gold charts. AU USD from an analysis standpoint. First of all, the analysis from last week played out. Remember price. I remember everything. I think this was the candle from this was the last 4-hour candlestick last week. Yes, that's the one. That was the last 4-hour candlestick for last week. So in my weekly analysis, I plotted this zone and just drew this arrow all the way to the top here. I said price is moving from here to here before it sells off. So I took it to the daily time frame on that analysis and say, hey, I think this is where price is going to drop back into. I think my second challenge, I should take this trade. I don't know why I wasn't keeping an eye on it. I had a very busy day today. I think I will keep watching. It's already too late. So I'll see what happens next. I'll see what happens tomorrow morning. Like I said, for those that tuned in late, I'm trading for this December vacation. I hope it all scales through. So I hit the first trade last Friday. I'm going to be releasing the video tomorrow. Because before taking the trade, I recorded everything, my thought process, my risk management. I calculated everything. I'm going to be publishing it tomorrow. I didn't publish it yesterday because I was waiting for the withdrawal. It's funded next prop firm, so I'm going to be publishing that tomorrow by God's grace. Okay, so let's see how this plays out tomorrow. Probably I'll take this buy. Let's see how that works out. But anyways, back to the question: what's my view on gold for the next 2 months? Now that's the tricky question. So I like to go with the flow. So if you had asked me this question when price broke out of 3,500, because when I analyzed this, that was around August. Yes, around August. So I was like, hey, 35 is the highest price that gold has traded in a long time. At the time, 3,500 was the highest point, and then we had like the next month, the third month, the fourth month, the fifth month before the breakout. So around August, I said, hey, you see that we'll go for a deeper pullback or we'll break around above 3,500. Right. So okay, I'll respond to your questions and just give me a moment. So 3,500 price eventually broke out of it. So I knew that if price breaks out of it, price may most likely continue blasting to the upside, which is what has happened. So now, if you look at the overall trend, gold has been super bullish. Now it's going to be difficult predicting gold in the next 2 months. Now, overall, we need to understand that gold is an uptrending asset. I don't know. Let me not use the word never. But for now, based on fundamentals, based on demand, based on everything, gold is an uptrending asset, just like NAS and the rest, even Bitcoin. You understand? So it's always going to trend to the upside. So any pullback is just a mere pullback. So now the price has been super bullish. So now, if we are ever going to go for a pullback, then 35 will be the best option. So I don't know why you asked the question, but there are ways I trade this. Let me let you into that little secret. Those that have attended the mentorship, especially, they know this. When it comes to Bitcoin, gold, and S&P 500, I really don't trade them like I trade Forex. So what I do is I trade them as an investor. So what does that mean? Let's use crypto that everyone knows about. Let's take that as a case study. So let me even go to BTC. I'll come back to gold. I'll still try to analyze it so that you have a view of what may happen. But let's use BTC/USD in this case as a case study, right? So I remember telling the just concluded cohort that not even just the not just the recent I think in one of my analysis, yes, I remember. If you go back to around April the 7th or the 6th or the 5th, between the 5th or 7th. Is it here? Sorry, it's not there. Sorry, not April. Sorry. Let me go to the weekly time frame. Yes, around here. Not April, because I knew that April is too far away. Yeah, September. If you go to my September weekly analysis, this is 1st of September, Monday. So if you go to Friday of that week, just go on YouTube. I'm sure of what I'm saying. Go on YouTube. I uploaded this around that period. So I think, yeah, around Sunday. So if this is 1st, then that will be 7th. Go to my YouTube video of September 8th. Yes. So 8, 9, 10, 11, 12. So I said, hey, BTC is going to trade to the upside here. Okay, I didn't even know that it was going to break above, but I said it's going to trade to the upside here. And I explained how I'm getting into the trade. So I explained that, hey, I don't trade BTC the way I trade take other trades. So I invest. I go in as an investor. So I actually buy the coin. So let's say, hey, I have like $5,000, $10,000 that I want to invest. So I'll go in with that $10,000 here. So at the time when I was getting in, my profit margin between these two areas was 6% because I calculated it. If I'm not trading it now, if I'm actually investing, so it was 6%. You understand? So going in with the volume I went in with, price move from here to here, gave me 6% profit. Remember, if you're trading it, where you get in, where you get out, your profit margins might be like quadruple what I made. You get the point. But I don't like trading so that in case price tanks on me, I know I still have that amount of BTC I bought. Yeah, the value is kind of lower. Then I just have to wait till price recovers because it's always trending to the upside. The demand is always high. You understand? So now when price gets to my target, I don't close 100% of the trade. So I'll take like 80, sometimes 90 out. You get, I'll take like 80 or 90% out. You understand? So I'll take like 80 or 90% out. Then when I take it out, I'll wait for price to, I'll use technical analysis to time my entry. So what do? When I want to invest, I'll just go to Bybit. We don't have Binance anymore in my location here. So I'll go to Bybit and then I'm going to buy into the crypto. So the same thing, I do the same thing on S&P 500, not Nasdaq now, S&P 500 and gold. Sometimes I also trade gold anyways, just like I trade Forex, but I also invest in it long term because these are uptrending indices. They only trend in one direction. So even if they have a moment of pullbacks, drawdowns, maybe 2 months, 3 months, 4 months, they will always recover and continue. You understand? So I do the same thing on gold. Now, that said, I just felt like we are having a conversation today, right? I knew I said 30 minutes, but we are 45 minutes in already, but I'll try to round up soon. But going back to your analysis, if I come to the monthly time frame, price has been super bullish. Now, if I go to the weekly time frame, now I want to analyze. I want you to notice something. This is part of how I analyze. I'll look at the behavior of price. Okay? So I'll look at the behavior of price. Let's look at here too. Right? So you see the one that trended up you notice the behavior of price. Price was super bullish consecutively for weeks. Now, this week so far, we are seeing bearish price action. What do you think? If price successfully closes this week with this impulsive bearish candlestick, don't you think, all right, price may be preparing for a pullback, not a drop off? Of course, it's going to sell, but remember that long term gold will always be bullish. Do you understand? So, to answer your question, if this is bearish, we still have one more week for this month. So, for me to be able to answer this question properly, I would like to see how we close for this month. I would like to see if we have two consecutive bearish weekly candles. I'll be able to tell that, hey, I'll just play with market structure. I'll say, okay, this 3,500, which is this black horizontal line here, right? Which is this black horizontal line. Price, that's the area price broke out from. So if we come for a deeper pullback, that is where I think price will bounce off from and go on to create a new higher high in the future. All right. But if that doesn't happen, I can categorically say, especially with the current momentum of gold, if price breaks above 4,381.440 cents, if price can break above that, price is going to continue trading to the upside. So I think for now, I'll just go in with a weekly analysis. The only time I can say for a fact that, hey, price is going to do this long term is if pullback is actually real and comes into 3,500. If it comes into 3,500, boom, for the next 3-4 months, I'll even be bullish on gold. You understand? But for now, it has been so bullish for a long time. It's going to come to a point where everyone will want to take out profits. And when everyone takes out profits, price is going to want to go for a correction. Then they'll want to buy again at a cheaper price. All right. So for now, it's already too late to predict a 2 months run. But if you say, what's the next 1 year run on gold, is going to be bullish. It's easy to predict. You understand? It's going to be bullish. But you know, timing is very, very important. You want to be able to time your entry. So let's see how we close for the month. I think I'll commit these few questions to Pat so that I'll remember. Probably in one of my weekly analysis, I will even talk about it. And if I don't, towards the end of this month, just remind me. I will include it in the analysis. Then I'll be able to analyze. Let's see how next week closes. Let's see the nature of the candle. CPI is on Friday. Let's see if CPI blasts higher. If CPI blasts higher, then we'll just continue trading to the upside. But if CPI tanks gold, then probably we are going for a retracement, hopefully into 3.5 before we go on and break above this all-time high that we have now. All right. So let me look at the next question. If you have any other question, please drop it. Let me look at WhatsApp. Here's my WhatsApp. Okay. So I think I've been able to answer some of our questions because I noticed some people deleted. How does ETH look? I've been give me a moment. Okay. How does ETH look? I've been invested in it for a long time. I'm pretty sure the end of the year is usually the high, with June being the low. All right. ETH with the pullback I'm seeing on BTC. Let's even look at Ethereum. Sorry, ETH USDT. Let's use Binance. Okay. Consecutive weeks of pullbacks. Let me plot a zone around here. Oh my think, let me just put this here. Oh, okay, I'll just put this line here. If ETH, I think this is the last line of defense for ETH to go bullish, because looking at the weekly time frame, I'm currently on the weekly time frame, it is still bullish. This is a simple bullish market structure, right? High, higher low, higher high. So hopefully a higher low, and then we'll continue. So that's why I'm going to leave 3,477.47 as the last line of defense. Okay. Or let me modify that. Let me put it here. 3,424. So if price breaks below 3,424, that means the next area to be looking for a possible buy will be 2,568. I want to think, yeah, it's obvious the price is dropping. Let me look at the monthly time frame. This is the second bearish month. Let me make that weekly zone visible. I think price may even go bullish next month. Okay. All right. Let's go back to the monthly time frame. On the monthly time frame, this is simple. The way I like to use market structure, this swing point responsible for pushing price lower, right? Then price went higher, broke above it, come for the pullback. Price may continue higher from here. Looking at it from the monthly time frame perspective, I think price looks like it's going to move higher from here. So if that's my mindset now, how will I time my entry? Now I'll just jump all the way down to the 4-hour time frame and just plot an area that is just going to serve as an area of confirmation for me. Okay, so this is a valid swing point. This is a valid swing point. So if price can, the bullish confirmation will start above 4,247.36. All right. Still looks like, yeah, we can buy from here, but stop loss has to be below 3,424. But if you're looking for something that is going to give you a tighter stop loss, that's if you trade this on the spot, then I'll recommend you should be patient for price to break above 4,247.36. You understand? But if you're buying, if you're investing in the actual coin, you're going to an exchange to buy the coin and hold. I would say you can start unload. I do. So what I do is, if let's say for instance $20K is my investment portfolio on a particular idea like this, what I'll do is I could put in 10K at this point. So if it comes down to this lower point, I could put in another 5K. Then if it starts taking off again, I would complete the 100% 20K investment idea or portfolio I intended to put into the trade. You understand? Alternatively, again, you can unload like 50% at this point. If it keeps going higher and breaks above here, I could put the whole 50% remaining into it. But if it's going lower, I'll go in with 25%, then later add the remaining 25%, if you get my point. But looking at the monthly time frame, looks like the pullback is complete, because I love to see two candlestick pullbacks. Why did the pullback even happen in the first place? It's simple. Remember I said I love bodies of candles, right? This is the first significant rejection. So if price comes back there, we are going to definitely see that reaction. You're definitely going to see that reaction. So that's why, should I say definitely? I hate to use that word. We are most likely going to see that reaction because the markets will humble you. Okay, but the one kind of pullback I like is at least two candlestick pullbacks. So if I get at least two candlestick pullbacks, I'm good. Okay, so someone else is asking, what's your view on GBP, USD, and Euro USD? Okay, but before I jump onto that, so I think looking at what price is doing on the monthly time for me, it's still very nearing the end of the month to see how weak or how strong we close the month. So if we close with a strong bearish candlestick, let's say probably before the end of the month, this monthly candlestick closes below this zone, at that point we may still push lower. All right. But if it closes anywhere around this zone or above this zone, I think price will go on and continue trading to the upside. Now, in this case, we'll still use these highest points as our initial targets. Then if price breaks above it, we can continue trading to the upside. You understand? So yeah, I got your message. You say thank you. I appreciate that. So which means I've been able to explain in detail. So I'll take one more question before we proceed so that I don't bore you out with my noise. So I would have loved to talk about the other strategy, but I think since we still have two other webinars, there are other webinars where we are going to spend more time. So the purpose of tonight's webinar is just to refresh our memory on what we've discussed previously. Okay, so let me take one more question. I don't want to cheat anybody. Let me see older questions. Okay, the other ones are personal. Okay, I got a voice note here. Give me a moment. I think this is from. Let me listen to the voice note. Sorry, I'm listening to the voice note. Okay. Okay, so those were two questions from Mr. Joseph. So the first question is, he said he applied that 15 minutes strategy on, I've forgotten the pair, something card, but he was doing it on the 1 hour time frame before switching to the 15 minutes time frame. Now, the rule of the strategy states that 4 hours and above, so 4 hours zone, daily zone, weekly zone, or monthly zone. You understand? So don't do this 1 hour time frame because the 1 hour time frame down to the 15 minutes time frame are still super close. You understand? Now, even if it's on the 4 hour time frame and today is the first time you're applying it and it was a loss, excuse me, still really doesn't matter, because sometimes we take losses, sometimes we take a win. As a matter of fact, today, even in the signal group, there was a loss. At some point, price was floating at 1-to-1. I even sent out the information that, hey, we're trading at 1:1. I love 2-to-1s. And for those that has been with me for the longest, some of the students even tackle me sometimes and they'll be like, hey, why do you leave a lot of money on the table? Because I love 2-to-1s. Then sometimes again, they'll be like, why don't you take any action during trade? I say, hey, this is just day trading. I mean, the maximum stop loss is 20 pips, right? So I don't like any trade. So it either hits target or hits stop loss. So it was floating at 1-to-1, no break evens, price went back to its stop loss. Doesn't mean that I'm not going to repeat it tomorrow if it happens again. You get the point. So no strategy is 100% perfect. There are times, like I've said earlier, you go through drawdowns, you come out of drawdowns, you trade through break even, then you come out and you're super profitable again. You understand? So it's a cycle. It's how life works. So yes, today may be the first time you apply it, even though you didn't apply it correctly. But now I'm assuming that you did it correctly. You actually did it how you're supposed to do it. Even if it's a loss, it doesn't really matter. You understand? You need to, first of all, even before applying it, because you didn't mention anywhere you back tested it, personalize it, because we can never plot our zones 100% alike. You understand? And looking at your name, I can tell that, okay, you've never for our mentorship. So probably you don't even know exactly how I plot my zone. You understand? But that doesn't mean you may not know how to plot your zone. So everything comes together eventually. So even if you still know how to plot zones, fine and good, I will recommend that, okay, have you tried to backtest it? Because through backtesting, you'll be able to now personalize it. You'll be able to see that, okay, if I plotted this zone this way, would you have performed differently? Then all of those things, you'll be able to come to a conclusion on how to plot your zones. You understand? So even if you did everything correctly and it was still a loss, so be it, right? You want to rinse and repeat. But one thing that is going to boost your confidence in this strategy or any other strategy for that matter is to do what? Backtest it. Now, during the process of backtesting, you end up personalizing it. You end up making it your own. You may even end up looking at spotting one pattern that you could make and even make it better for yourself. You understand? So I don't know if you did all of that. But first of all, based on your voice notes, you did it on the 1 hour time frame. So please do it on the 4 hour, daily, weekly, or monthly. You understand? So if price approaches any of these levels, you want to switch over to the lower time frames, like the 15 minutes time frame specifically, wait for a change in market structure. If it's at a resistance, wait for a change from bullish to bearish. If it's at a support, wait from bearish to bullish. You understand? So it's as simple as that. Then for the second question, you're talking about what was my view on gold funded prop firm. Actually, I don't think I'll be in the best position to answer that because I don't trade with them personally. You understand? So personally, for those that have known me for the longest, I like to stick with prop firms that kind of have a track record of paying out. You understand? Because to be honest, these prop firms are out there to rip us off, even the brokers that we trade with. And that's why we have A books and B books, So we want to make sure that we trade with a prop firm or broker that has a reputation of paying out. You understand? Because brokers are even still better. I think to a large extent they are regulated. Prop firms are not that regulated yet. So someone can just wake up one morning and just go with your money and there's nothing you can do about it. It hurts. Just like MFF. MFF is the prop firm I lost the most with, but you get the point. So, but I think that said, I think I've been seeing goats funded prop firm around for quite some time. I think they are doing well. I don't know if they are still around because I've not looked at them recently, but I think so far they are doing okay. Okay. So you can start small with them. You understand? You can start small with them. But for me, I use popular prop firms that have a track record of paying out, and then I try to max them out, buy multiple accounts with them. You understand? But so far, so good. I think Goat Funded is also doing okay. So you can try them out, but just try them with a little capital. See them pay you out before you stack things up. Okay. So this is 4 minutes past 1 hour. So let's just stop here for tonight so that I'll just release some of us. I know some of us may be stressed out from work. So our next webinar is going to be next Wednesday. I have another strategy that I wanted to talk about. So I think I'm going to be starting with that next Wednesday. I want to appreciate everyone that tuned in tonight. And if you asked a question I couldn't answer, I apologize for that. I can really go through all of those questions. All right. So hopefully, if I remember those names, you will be the number one on my list next week. All right. So the recording of this night's session is going to be available tomorrow. So thanks once again for tuning in. I'll see you in the next webinar. All right. Have a wonderful night rest. Have a wonderful day, everyone, and good night. Bye.